Good morning, everyone, and welcome to the SRX Global Fireside Chat. Thank you all for joining us today. My name is Walter Pinto, Managing Director at KCSA Strategic Communications. I'm joined today by Kent Cunningham, CEO of SRX Global, and Eric Jackson, President of EMJX and Head of Asset Management for SRX. As many of you know, SRX recently closed on its acquisition of EMJX, and today has emerged as an AI-enabled platform focused on investments in high-conviction companies and assets. I'm looking forward to providing our shareholders with an update today and discuss the company's vision with Kent and Eric. I'd like to start by reminding everyone that statements made today may be considered forward-looking within the meaning of the Private Securities Litigation Reform Act of 1995 and applicable securities laws. Actual results may differ materially from those expressed or implied due to risks and uncertainties described in the company's filings with the SEC, including its periodic reports and investor materials. SRX undertakes no obligation to update forward-looking statements, except as required by law. Towards the end of today's Fireside Chat, we'll open the floor to live Q&A. It's been a busy last few weeks. We have a lot to cover in today's call. We received a lot of incoming questions from our shareholders, and for that, we thank you. For investors who have not yet submitted questions, please send them through the Q&A function at any time. We'll cover as many questions as possible during the time allotted for today's call. If for some reason we don't get to your question during today's session, please email us at srx@kcsa.com. Please note this call is being recorded today, Tuesday, July 14th at 10:30 a.m. Eastern. A replay will be available on the SRX Investor Relations website following the conclusion of today's discussion. Before we begin our conversation, I'd like to kick it over to Kent for opening remarks. Kent?
Hey, thanks, Walter, and thank you to everyone for joining us today. Look, I would say the last several months have been nothing short of transformational for our company. As you all know, and Walter just mentioned, we recently completed the acquisition of EMJX, creating new opportunities, but also enabling a new platform that we're incredibly excited about. And Eric and I are going to talk more about that, about the why on this call. And as we stand today, we positioned our team, our balance sheet, and I'd say our strategy for long-term growth. At the same time, it's been a frustrating period for shareholders. I get that. I understand that the volatility of recent weeks can be unsettling. And, as significant shareholders ourselves, management and our board feels that responsibility alongside you. So what are we doing about it? Well, I'd say, first, we moved quickly and decisively to deliver value back to shareholders, announcing the $1 million aggregate cash dividend. At the same time, the board also authorized up to a 10 million share buyback. That gives us another capital allocation lever that we can pull when necessary and when appropriate. And as we reported preliminarily last week, this is one of the things I'm most excited about. We have $55 million in cash and short-term investments as of June 30, 2026, no debt, and that equates to a net asset value of approximately $307 per share. So we're operating from an incredibly strong position at this point in time. I think we also want to reassure everyone that necessary steps that we took, like the share consolidation to get us to this position of strength, are behind us. But we've got more work to do. So as we look ahead, I'd say our commitment's simple. We're going to focus on things that are within our control. So that means we'll leverage our operating expertise, we'll leverage our proprietary tech, and also our differentiated market access to identify opportunities, allocate capital with discipline, and create long-term value for our shareholders. Because we believe that consistent execution is the surest path to creating lasting shareholder value. Walter, I'll kick it back to you.
Thanks, Ken. I appreciate that. Let me give an opportunity for Eric to make some opening comments before we get to our Q&A. Eric?
Thanks, Walter. I'd say that what Kent just described is, if I was an investor looking at a stock, everything he's talked about happening at the company in the last few months is all about cleaning it up, fixing it, making it in an incredibly strong position to go forward. And that's obviously that matters for investors. But from a look forward basis, I'm going to talk about EMJX here mostly today. I think that's really the growth engine that to look forward to here as part of this story. And so what I would say is when we first announced the deal in December, we've basically done everything we said back then over these last 6+ months. Back then, we said, remember, we thought Gen 1 treasuries were uh, a misguided way of allocating capital. We felt that though that they were simply bobbing on the waves with the price of Bitcoin. And we didn't really understand why they were trading at, in some cases, 4 to 8 times MNAV. I think the highest ever was Metaplanet trading up to 10x MNAV at one point. We felt a better approach was a Gen 2 treasury approach, which is what we built over the last 6 months and for years before that. And a Gen 2 treasury approach is a multi-asset treasury. So it's Bitcoin, Ethereum, other cryptocurrencies, and other equities as well, as including options, different kinds of call spreads, put spreads, and so forth. We felt that it's not just an interesting business on its own as a treasury, but basically every corporate treasury going forward is effectively going to have to be a Gen 2 treasury, where they're going to have this mixture of cash and stock and crypto assets with incredible volatility that they need to control for. And we saw the challenge was to use AI models to manage that volatility and make money in no matter what market regime we were operating in. Anybody looks great like MicroStrategy and Bitmine inversion when the price of Bitcoin or Ethereum is going up. But we've seen in these last 6 months what happens to them when the price goes down and they get dropped. We just released a press release this morning that talks about how the EMJX Treasury, since Feb 11th, has made on a paper trade basis, not with capital, 25%, while the price of Bitcoin was down 5% over that period. Price of Ethereum was down even more. And then names like MicroStrategy and Bitmine were down even more than that. It's very important also to explain to you how that number was derived. If I just went on the weekend and said, hey, I'm going to create some strategy to perfectly trade the past 6 months and gave it to Claude Code, I would have perfect information about exactly what happened over that 6 month period of time. And Claude Code would dutifully churn out some return that made money. But that's not what we did. We generated those numbers on a go forward basis. With the SRX board back in February when we started this, because the deal hadn't closed yet, we started trading the EMJX model where every day I would email before 10 a.m. a member of the SRX board with the trades for that day, with the market regime that we had in our model for that day. It was approved. The trades were made at the prices that they occurred at that time on a go forward basis. That's a go forward strategy. That's a strategy that will make money in multiple different types of environments. We've made a lot of money in this bearish market. We believe that we will make money in the bullish market. And then we have, therefore, if we prove that to you guys as shareholders, we will be able to show that we can make money in multiple markets. We are not one of these Gen 1 treasuries that's just basically just a 3x version of Bitcoin or Ethereum. That's unique. That's different. There's nobody else out there. There are people that are playing around with creating fancy dividends around the price of Bitcoin. That's not what we're doing. I'm a simple guy. I like to make money in no matter what kind of market condition we're operating in. That's what we've delivered in EMJX. We're going to go through that today in more detail. And you guys will have to judge. At the moment, as Kent was saying, we have $3.07 of NAV. And the last time I checked, the price was trading below that. We don't agree with that as management and as the board. We think that if everything that I say is true, we can take money and make more money in any kind of market that we operate in. We think we deserve a premium to NAV. But the pressure's on our shoulders to prove that now. Back to you, Walter.
Awesome. Thanks, Eric. Very well said. Over the last few weeks, we've heard from many shareholders and have been collecting feedback and questions. While we aim to address as many of the themes and specific questions we received on this call, I do just want to remind everyone that we must also adhere to SEC rules and regulations that we're subject to, especially now that we close our June 30th quarterly period. And shortly, by mid-August or so, we'll report our full June 30th financial results. In those results, we'll be providing updates on our cap table and other updates within the quarterly filing. We also plan to host an earnings call, so we'll be speaking with everyone here shortly. Now to get into our Q&A, Kent, start with you first. As we mentioned, the company recently closed the EMJX acquisition. Can you talk about what you saw from the team in EMJX and how the acquisition fits into the company's new platform going forward?
Yeah, absolutely. For us, the opportunity, and Eric, mentioned some of this as well. It was larger than simply operating one business. We saw the chance to combine decades of operating expertise with advanced AI that Eric and the team have built with EMJX, and then couple that further with smart capital allocation into a platform that's capable of investing across multiple industries, multiple sectors, basically in places where we believe we have an advantage and we can create value. So in simple terms, we're combining operating expertise and experience with disciplined investing, but we're fully leveraging proprietary AI that continuously learns to create what we think of as asymmetrical return possibilities. And for us, I mean, that's a game changer for us and for our shareholders ultimately.
Thanks, Ken. And Eric, back over to you. And you started talking about this morning's release, which gave the data really important, updated information on our investments. You dig in further on the breadth of our AI and machine learning engine and how you use these capabilities to make your investment decisions?
Sure. There's really two parts to building a great model and then making money from it. Okay. So building the model, we started with over 2,000 variables or features that we were first looking at to give us clues about where the price of Bitcoin or Ethereum would be going in the next 30 days. You start predicting beyond 30 days, the quality of the prediction starts to drop off. So we basically, have this sort of 30-day look forward period. What are the factors that are going to give us the biggest hints of where the price is going? And from those 2,000, you sort of winnow it down to the most important ones. What we ended up building was, we call it a regime model. So you could think about, like, there are different flavors in the market. Like, obviously there are bull markets, sometimes there are bear markets. At the moment, we're in a mixed market or a choppy market. And then there's degrees of variation within those three kinds of states. Obviously, when it's a bull market, prices tend to go up. When it's a bear market, prices tend to go down. So we've developed a model that gives us an indication of where the price of crypto is heading. And most recently, in today's press release, we talked about how just last week, the model flipped from a stress model, which it has been in since May 26. And on the morning of May 26, the price of Bitcoin was $77,000. We got a signal that our regime model had flipped to stress. We prepared, appropriately. And then subsequently, the price of Bitcoin dropped over the next several weeks to 58,000. Just last week, though, we got a signal that it had come back to mixed. And that's when Bitcoin was 61,000. So again, we took appropriate action. But the second part of how you make money, though, is sort of like, it's one thing to know, okay, we've gone from bullish to mixed or mixed to stress. But then there's the whole business logic of how you manage a portfolio to actually make money from those hints that that's where the prices are going. And so that's obviously the secret sauce for us and how we make money. But I would say it's a combination of, obviously, if we think the price of Bitcoin or Ethereum is about to drop in the next 30 days, we're not precious about holding Bitcoin forever. We're not one of those kinds of treasuries that we believe in never sell. We will reduce the amount of Bitcoin or Ethereum that we hold overall in the portfolio. as I said, we do hold other kinds of altcoins, what we call high convexity equities, names like Open Door, which we think over time can double, triple, even 10x in some cases. But if you're in a bearish market, obviously we will be more lightly exposed to those kinds of higher beta names than we will in a bullish market. And then obviously there are options as well. Just buying put spreads, call spreads, far out of the money, puts or calls, as the case may be. We will bring those to bear. And those are some of the reasons why we've been able to generate this 24%, 25% return since February in what's been a kind of a lackluster bearish market. So it's one thing to build a great model, as I said. And the other thing that's really important to know is that think about guys like Michael Burry or the other guy, Kyle Bass. Two guys, they're on TV all the time. Why? They were famous for calling the housing crash in 2008. Subsequently, every time they come on TV, they're talking about another crash coming, which generally has been wrong advice to take. When we build our model, when we look at different snapshots in time, we call those windows. Okay. And for us, it's not right. It's not enough to just be right in one out of 15 windows, the way Burry and Bass have been right. We want a model that makes money across all 15 windows, right? And that's a much more difficult task. And so it's taken a lot of time. It's taken a lot of effort, but we now have that model in our hands. Doesn't mean that we can't stop working on it because things change, markets change, conditions change, and we continue to iterate. We're currently on version 23 of our model, and it keeps getting better and better. So that's part of the game. You can't rest on your laurels. You have to keep at this. But the good news is we are proving that we are making money in multiple kinds of markets. That's our intent going forward. And we think there will be a huge demand for being able to license and use and access a model like that.
Thanks, Eric. Appreciate that. Kent, we've spoken a lot about EMJX today, but we also have the Halo brand. We have other investments. From your point of view, I mean, how do all the pieces fit together under this new platform?
Yeah, I mean, I guess what I'd say is, look, we aren't trying to be everything to everyone. Our goal is really, and Eric just outlined it, we want to be exceptional at allocating capital, at making the right calls, and then executing operationally with both investment choices across sectors where we see signals or patterns, and where we believe there are opportunities where we can create disproportionate value. And you mentioned Halo, our premium pet food business. That's a good example. We can now use EMJX developed AI and its continuous learning. Eric mentioned it's on version 23. It's going to keep getting stronger and better as it gets more and more inputs and signals from various, disparate market signals. But we can start to detect real-time demand signals for the Halo brand. So we can uncover category, competitor, or consumer sentiment shifts that we can then plan for and take advantage of while they're still nascent and still developing. So that gives us sort of a first mover advantage, because we can then effectively fuel those shifts that help drive household penetration for the brand. Or on the flip side, we can respond sooner to trends or actions that we're seeing in the marketplace that could be detrimental to brand health or to our sales overall. So that's something that we think is incredibly powerful, for the brand and for the business overall going forward. You mentioned for new investments, look, sometimes we're going to control businesses. Sometimes we'll invest alongside founders, management teams that are outstanding. And sometimes we'll pursue special situations where complexity creates opportunity for us. And sometimes the highest return investment may be our own shares. as we communicated last week. But regardless, every investment, every capital allocation decision competes against every other. Period. That's the business that we're building.
I appreciate that. And I am seeing several questions regarding the buyback. I just want to remind investors, all public companies are subject to blackout periods. We just reported our results. We'll be providing more updates in the future, but just some investors do not fully realize that there are blackout periods for all public companies when it comes to when and how much they can buy back of shares. Um, Eric, we started talking a little bit about, investment opportunities. A question came in. Curious as to your thoughts. Where are you seeing the biggest investment opportunities right now? Is it financial services, consumer, healthcare? How are you kind of thinking about what the market is telling us right now?
Well, in terms of using the EMJX model, we have a lot of choices, and so we are planning on using it ourselves internally at SRXH in our own treasury. And as I said, we think that over time the market will view that model and its ability to generate cash as something that's deserving of a premium. For every dollar in, we think it's worth a premium to that because it's going to generate money. Is it going to be worth 10x MNAV? I don't know. I mean, it's up to the market to decide. We certainly think it's worth a heck of a lot more than all these Gen 1 treasuries that are doing absolutely nothing to create value except plowing their money into Bitcoin and rising and falling with the price of Bitcoin. So to be able to make money in different kinds of markets, we think should be something that investors get excited about. Evidence of that, though, is that we are also getting inbounds from other people who have inquired about licensing the model. So there are some people, including Gen 1 DATs themselves, who've asked whether they can have access to our regime model to give them insights into kind of where the direction is going. It's now become, much more acceptable to reduce the amount of Ethereum or the amount of XRP or the amount of Bitcoin that you might hold if you're a DAT than it was, say, 8 months ago when everybody was in this never sell kind of mindset. So we are exploring those kinds of discussions, not just with DATs, but obviously there are others, corporate treasuries, other institutional investors who think it could be highly valuable to know where the price of Bitcoin is going in the next 30 days. And we'll pursue those kinds of things where we think it's going to add value for SRXH shareholders. The other kinds of discussions we've been having recently are with ETF companies who are interested in this kind of a strategy of becoming an ETF product itself that could be accessed by anyone, unlike hedge funds or some more exotic investments that have to be gated by only to accredited investors. And so those discussions are ongoing. And again, we'll have to make a decision that's in the best interest of SRXH shareholders. But finally, I just wanted to go back to Kent's point about using AI in other contexts. One of the kind of non-intuitive things that we've learned as we've gone through, up to iteration 23 now, is that some people would think if you want to build a better Bitcoin model, you should have the blinders on and only eat, sleep, think about Bitcoin 24/7 and only look at those kinds of features that you think are relevant for Bitcoin. It turns out counterintuitively that building a better Bitcoin model occurs when you build models that address other industries, other contexts, whether it's like the biotech industry, whether it's consumer industry like Halo, even in things like making predictions about politics or how the Supreme Court is going to rule. We've found that when we've expanded our view and tried to apply our models to those contexts, that we pick up things in each situation that ends up becoming something useful that in a very small but powerful way ends up making our version 24, version 25 Bitcoin model that much stronger. So, and that helps us, we think, stay ahead and continue to kind of, we think it'll help us outperform in the years to come. So That's a non-intuitive but striking finding. And so whenever we are able to use our models in other investment contexts that we think can create value for SRXH, we're going to do that wholeheartedly.
Thanks, Eric. Appreciate that. Um, and just a few more questions as we near the end of our chat today. And I appreciate everybody submitting their questions in the Q&A. Here's another one for you, Kent. And you mentioned at the onset, the company has the strongest balance sheet probably in its history. Can you walk us through capital allocation priorities for you and the board?
Yeah, that's, the balance sheet's one of the things I mentioned I'm most excited about. We've got over 55 million in cash and short-term investments, no debt, and frankly, a much simpler capital structure than we've had historically. And that puts us in a very different position than even just a few months ago, and it's a position of strength. So as we think about how we best deploy that capital, I mentioned every dollar has to compete against the others. So we aren't thinking about acquisitions or treasury management, minority investments, or Halo in isolation. It's a comprehensive lens that we're using to assess attractiveness. And I guess what I'd say or tell you is that our priorities are pretty straightforward. Preserve a strong balance sheet. Liquidity gives us flexibility, and that flexibility becomes a competitive advantage when opportunities pop up that we think are attractive and make sense for us. The second one is we're going to keep investing in our core operating businesses. So where we see meaningful opportunities for both organic growth or M&A bolt-on, we'll look at those and we'll lean in to create value. And last, we'll deploy capital again into high conviction investments and strategic acquisitions where we believe we have a differentiated insight and the right to win. So overall, I would say to you, we have the necessary capital right now to execute our strategy, continue investing in the business while we still also pursue new opportunities and do all of that from a position of strength. And I guess last I'd say, having the cash is one thing, deploying it thoughtfully is how we'll create shareholder value.
Thanks, Kent. And we're just about up at time, but this is an interesting question for both of you, starting with you, Kent. What are the catalysts that investors should be looking forward to in the next 6 to 12 months? Start with you, Ken, and then we can have Eric answer as well.
Yeah, I'd say over the 6 to 12 months and even the longer horizon, I'd encourage people to watch our execution. We're focused on building out this platform that can consistently create value and increase value per share. And there's a few areas I'd say that you'll probably see meaningful improvement from us on and meaningful progress. We've talked a lot about it, but disciplined capital deployment. We're going to keep evaluating and executing against high conviction investments and opportunities where we think we've got an advantage. What we won't do is we're not going to invest just to stay active. So we'll invest when the patterns are there, when the signals are there, and when the opportunity meets, I guess, our return and risk profile as we're looking at it. The second one for me is continued development of the EMJX platform. And again, Eric mentioned that it's continuously improving, right? So you'll see that improvement and you'll see that we'll continue to enhance the AI and enabled investment capabilities. We'll refine the process and then ultimately expand the platform's reach. And then probably third, I'd say a renewed focus and on the operational execution as well as investment within Halo. Halo, it's an important operating business for us, right? And so we're focused right now on product innovation, on expanding distribution and improving execution at the same time that we're driving increased profitability and long-term growth for that brand.
Thanks, Ken. Eric?
Yeah, I mean, obviously today's press release and being able to share with everybody the performance of the EMJX uh, strategy over these last several months was exciting. We've heard from many shareholders who've said, we want to hear more. We want more communication. And obviously we're sympathetic to that. As Ken said, we're all shareholders here. I don't think any one of us or anyone on the board has been happy with the performance of the stock in the last, I don't know, whatever, few months. We think it's worth, we see it being worth much higher than where it is trading currently. But it's on us to perform. That's our jobs and communicate well to shareholders. So we've heard from many that they want more communication. And so from the EMJX perspective, obviously there was a big data dump today, but it's not like we're going to go silent for the next 6 months. It's on me to continuously kind of give you guys updates and reports on how we're doing. That'll be one thing to watch as we go forward. And obviously, if there's anything material to announce from a business development perspective, with some of the discussions that I said we're having at the moment, we'll share those as well. We've heard you. We want to be transparent as much as we can. You have to understand that this is not a mom and pop shop. This is a publicly listed company, and so we have to follow the rules. Okay, we can't just sort of off the cuff, throw stuff out there. But I think most people understand that. We're in this for the long haul. We believe there's an opportunity to do something magical here at the company, and you can hold us accountable to that.
Thanks, Eric. Very well said. I appreciate that. And I thank both of you for your time today. And we had a big audience and appreciate everyone joining today. This does conclude our fireside chat. As a reminder, the replay will be available under the investor relations section here shortly. Additionally, as I mentioned before, we are going to be reporting in mid-August. We'll have another conference call during that time, and we look forward to speaking with everyone. Please contact SRX at kcsa.com if you have any further questions that we were not able to address today. Thank you, everyone. Until next time.